Hello, everyone. Welcome to the special weekend edition of Markets Around the World. I'm K2, and we have some exciting news and data to discuss today. We'll dive into the latest updates, analyze key macroeconomic trends, and take a look at what's ahead in the coming weeks. Last week, U.S. stocks fell slightly due to new tariffs. The S&P 500, NASDAQ, Dow, and Russell 2000 all declined by about 0.2% to 0.5%. Weak job data, rising inflation expectations, and market volatility were key factors. Let's start with the news. U.S. stock futures reversed early losses on Sunday, after President Donald Trump announced that he would impose 25% tariffs on all steel and aluminum imports into the U.S. starting Monday. He also stated that he plans to introduce a series of reciprocal tariffs on Tuesday or Wednesday. On Friday, Trump mentioned that these tariffs could target imports from China, Japan, the European Union, and Taiwan, among other countries that already impose tariffs on American goods. If they are charging us 130% and we're charging them nothing, it's not going to stay that way, Trump told reporters aboard Air Force One on Sunday. China's release of the DeepSeek R1 large language model, with its impressive capabilities and low development cost, shocked financial markets, sparking claims of a Sputnik moment in AI. However, this achievement is no surprise. It's the predictable outcome of U.S. and Western policy failures, with the AI industry itself partly to blame. China's AI progress has been well documented, with researchers openly publishing advancements. The country's success stems from a strategic push for self-sufficiency across the digital tech stack, while the U.S. and EU have shown complacency, incompetence, and greed. With AI poised to reshape economies and militaries, Western nations should treat AI leadership as a top priority, akin to past strategic mobilizations. Yet instead of rising to the challenge, they are falling behind. High mortgage rates have made home buying difficult and slowed the housing market. President Donald Trump's focus on the 10-year Treasury yield is part of his strategy to lower mortgage rates and address the housing crisis. Could it work? Possibly, experts told MarketWatch. Earlier this week, Treasury Secretary Scott Bessent said on Fox Business that he and the president are closely watching the 10-year Treasury yield as they push for lower interest rates. Now let's review some data I want to show you guys. We begin with what's happening with Ethereum. Short positioning in Ethereum has surged plus 40% in 1 week and plus 500% since November 2024. Wall Street hedge funds have never been this short on Ethereum by a wide margin. The big question, what do they know is coming? Interestingly, despite the sharp increase in short positions, Ethereum saw strong inflows in December 2024. In just 3 weeks, ETH received plus $2 billion in new funds, including a record-breaking weekly inflow of plus $854 million. However, hedge funds are aggressively betting against Ethereum's rally, aiming to limit its breakouts. This would be historic. Both Elon Musk and Coinbase CEO Brian Armstrong have now proposed putting all U.S. government spending on the blockchain. This means $6.9 trillion in annual U.S. spending would be recorded on a decentralized ledger. Why is this more secure? Once data is stored in blocks, it becomes part of an unalterable digital chain. Permissioned ledgers can restrict access while flagging fraudulent spending almost instantly. If implemented correctly, it would be virtually unhackable. The Pentagon's accounting disaster. The U.S. Department of Defense, DoD, couldn't account for 63% of its $3.8 trillion in assets during a 2023 audit. Shockingly, a press release confirmed that the DoD has $3.8 trillion in assets and $4.0 trillion in liabilities, meaning the balance sheet doesn't even balance. Hard to believe, but it's real. Tariff uncertainty is skyrocketing. A record 44% of S&P 500 companies have mentioned tariffs on their Q4 2024 earnings calls, surpassing the previous high from the 2018 U.S.-China trade war. Meanwhile, the Trade Policy Uncertainty Index has hit its highest level since 2019. On Friday, President Trump announced plans to impose reciprocal tariffs on many countries this week. More market volatility is coming. Here's the final S&P 500 weekly heat map. Final S&P 500 top winners. NVIDIA Corporation plus 8.1%. Palantir Technologies plus 34.4%. Eli Lilly and plus 8.3% Costco. Wholesale Corporation plus 6.5% Meta Platforms, plus 3.7% top losers. Tesla, minus 10.6% Alphabet. Google, minus 9% Advanced Micro Devices. AMD, minus 7.2% Amazon.com, minus 3.6% Apple, minus 3.6%. This week's most notable earnings Monday. McDonald's Alabama Graphite. Tuesday. Supermicro Computer Shopify, DoorDash Lyft. The Coca-Cola Company BP Wednesday. Rudolph Technologies. Robinhood Markets AppLovin. Cisco Systems. Dutch Bros CVS Health Barrick Gold. Thursday. Coinbase Global Datadog Palo Alto Networks. Twilio CyberArk Software Applied Materials. DraftKings Airbnb. Deere & Company. Xerox. Sony Group. Roku. Wynn Resorts. Friday. Moderna. Fear and greed sentiment is currently at 39, indicating a state of fear in the market. Meanwhile, the S&P 500 is just 1% away from its all-time highs. Let's wrap up this video with key events this week. McDonald's earnings. Monday, Coca-Cola earnings. Tuesday, Fed Chair. Jerome Powell. Testimony. Tuesday, US CPI inflation report. Wednesday, Fed Chair. Jerome Powell testimony. Wednesday, Reddit earnings. Wednesday, Robinhood earnings. Wednesday, US PPI inflation report. Thursday, initial jobless claims report. Thursday, Coinbase earnings. Thursday, US retail sales report. Friday. All right, ladies and gentlemen, that's all for this video. If you found value in it, please like and subscribe. If you have any questions, feel free to leave them in the comments below, and I will get back to you as soon as I can. Thank you for watching, and I'll see you all later. Bye for now.